With Bitcoin's unbelievable highs and lows, the question on everyone's mind is, will it make a comeback in 2024? In this video, we will explore the various factors that could contribute to its potential success. Welcome to Simply Economics. Don't forget to subscribe to this channel and hit the notification bell so we can produce more informative videos such as this one. Everyone wants to know if Bitcoin will become big again and why. There is a lot of speculation and uncertainty regarding its future, but this video shall provide you with facts and reasons for why it could reach new highs in the upcoming years. What is Bitcoin? To better understand Bitcoin's future in 2024, let's review what it is. Bitcoin is a type of virtual currency that serves as a form of payment and operates independently of any one individual, organization, or authority. It is obtained through blockchain mining and is available for purchase on various exchanges. In 2009, an anonymous developer or group of developers under the name Satoshi Nakamoto introduced Bitcoin to the public. This cryptocurrency has gained worldwide recognition and is now the most popular one. As a result, many other cryptocurrencies have been developed. Some of these are created to act as payment systems, while others are used as security or utility tokens in new financial technologies and blockchains. What are cryptocurrencies? Let's improve our understanding of cryptocurrency, which is an application of blockchain technology. A blockchain is a decentralized ledger or a shared database that stores information. The data on a blockchain is secured through encryption techniques. On the blockchain, each new transaction is added to a block that contains information from the previous block. The block is then encrypted, and validators, known as miners, verify the transaction on the network. If the transaction is valid, a new block is created, and the miner who verified the data within the block is rewarded with a Bitcoin. They can choose to use, hold, or sell it. How to mine Bitcoin? There are different tools, both hardware and software, that can be used for mining Bitcoin. Initially, mining Bitcoin on a personal computer was viable and competitive. However, the growing popularity of Bitcoin attracted more miners to the network, reducing the chances of an individual solving the hash. Machines called Application-Specific Integrated Circuits or ASICs, which are devices designed for Bitcoin mining, are capable of generating around 255 trillion hashes per second. On the other hand, a personal computer equipped with the latest hardware can only churn out about 100 megahashes per second. If you want to become a Bitcoin miner, you can choose to use mining software that is compatible with Bitcoin on your current computer and join a mining pool. Mining pools are groups of miners who combine their computational power to compete with large ASIC mining farms. Bitcoin's price history. Bitcoin has an unstable trading history compared to other types of assets. When Bitcoin was first introduced in 2009, it had no value. However, on July 17, 2010, the price of Bitcoin increased to 9 cents. Then, on April 13, 2011, its price increased again from $1 and reached a peak of $29.60 by June 7, 2011. Bitcoin had a quiet year in 2012, but in 2013, its price saw significant increases. It started trading at $13.28 and rose to $230 by April 8 of that year. The price of Bitcoin increased gradually in 2016 and reached over $900 by the end of the year. In 2017, it stayed around $1,000 until it surpassed $2,000 in May and then rapidly rose to $19,345.49 on December 15. In 2020, the COVID-19 pandemic caused the economy to shut down. As a result, Bitcoin's price increased significantly. Due to the pandemic shutdown and government policies, investors became anxious about the global economy, which caused Bitcoin's value to rise even more. In January 2021, Bitcoin surpassed its 2020 price record by reaching over $40,000 in less than a month. By mid-April, the price had reached new all-time highs of over $60,000 when Coinbase, a cryptocurrency exchange, went public. Bitcoin's price showed a gradual decline from January to May 2022. The closing prices reached $47,445 by the end of March and further dropped to $28,305 in May. This marked the first time since July 2021 that Bitcoin closed below $30,000, and it dropped below $23,000 for the first time since December 2020. Bitcoin's price fell below $20,000 by the end of 2022 after the crypto winter began in November 2021. As of June 21, 2023, Bitcoin prices have surged to around $28,330.89 due to the bankruptcy filing of FTX, another cryptocurrency exchange. Is Bitcoin readying for a comeback? Investors are becoming more confident about Bitcoin's prospects after a promising start in 2023. Many market experts predict that Bitcoin could see rallies beyond $100,000 in the coming years, which has contributed to the overall bullish sentiment toward Bitcoin. In a recent survey by Nickel Digital Asset Management, professional investors are predicting a positive outlook for Bitcoin in the coming year and are optimistic about its long-term value. The survey revealed that nearly 9 out of 10 professional investors anticipate a rise in Bitcoin's price this year. Also, 2 out of 3 investors believe that Bitcoin may potentially reach a valuation of $100,000, but only for those who invest for the long term. Institutional investors predict that the price of Bitcoin will increase significantly in the next 3 to 5 years. The report revealed that 65% of investors believe that the value of Bitcoin could reach the $100,000 value in the long term. Out of these, 58% expect the rise to happen within the next 3 to 5 years, while 25% think that it will take more than 5 years to reach that value. Although there seems to be a decrease in expectations for 2023. Only 23% of investors predict that Bitcoin will go beyond $30,000 by the end of that year. What is Bitcoin halving? Halving is a term used to describe a process that reduces the rate at which new proof-of-work cryptocurrency is issued. This is done by periodically decreasing the block subsidy offered to miners. Halving is important because it ensures that a cryptocurrency will maintain a consistent issuance rate until it eventually reaches its maximum supply. Many people believe that Bitcoin's price will continue to rise because of its cyclical halving events. These events occur approximately every 4 years and entail cutting the rewards for miners in half. This mechanism controls the inflation rate of BTC and makes it scarce like precious metals such as gold. High expectations for the halving of Bitcoin. Bitcoin has experienced previous halving events in 2012, 2016, and 2020 that were followed by significant market-wide bull runs and culminated in the cryptocurrency reaching a new all-time high value, which is important information for investors. The stock-to-flow model is a popular way to analyze Bitcoin's halving cycles. It plots each halving event on a chart to show how Bitcoin has performed during those events. Many investors in the cryptocurrency market are preparing for a potential bull run throughout 2025, as the next halving event for Bitcoin is expected to take place in April 2024 and may lead to another record-breaking surge in value. Weakening of the dollar. The US dollar has been weakened over the past year due to the pandemic-induced economic crisis, and this could be beneficial for Bitcoin. Several financial advisors believe that weakening currencies will prompt investors to turn towards Bitcoin as an alternative safe haven asset. The dollar index, a measure of its value against a basket of major currencies, has dropped significantly. This makes it more difficult for the US Federal Reserve to raise interest rates and keeps inflation low, making Bitcoin an attractive option for investors looking to hedge against potential losses from a depreciating currency. Preparing for future regulations. The impact of regulatory policies on the extent of Bitcoin's future surge is widely acknowledged even by its ardent followers. The demand for more robust regulations in the cryptocurrency market has intensified after the downfall of FTX, prompting more significant players to call for it. Although this may be challenging for crypto investors who uphold the idea of genuinely decentralized assets operating without any interference or regulatory oversight, it could potentially have a positive impact on the market. According to Rajagopal Menon, the vice president of cryptocurrency WazirX, there is a global trend towards regulating the industry. Each country is creating its own laws to safeguard investors against market risks, address security concerns, and protect the monetary system in case the cryptocurrency industry experiences any instability. The cryptocurrency market is ever-changing, and there are always risks associated with investing. Bitcoin's halving event next year could lead to a surge in value similar to what was seen in late 2017 if investors remain bullish on the asset. It is important to prepare for future regulations in the cryptocurrency market as well as potential economic downturns. Investing in Bitcoin requires research and caution, but there are many tools available to help guide investors through the process. Ultimately, understanding how to mine Bitcoin and the associated risks of investing could be beneficial for anyone considering entering the crypto market. Thanks for watching, guys. If you enjoyed this video, please make sure to give it a thumbs up and hit that subscribe button so you don't miss out on any of our future content. We truly appreciate your support. See you in the next one.